Welcome to the official video overview for the IPO of Matangi Rubber Limited. We are engaged in the business of manufacturing of tires, tire flaps, tubes, and rubber compound. Our tire portfolio primarily caters to the two-wheeler and three-wheeler segments, while the tire flaps and tubes manufactured by us are mainly used in commercial vehicles such as trucks, buses, and heavy utility vehicles. Disclaimer: this video is directed at and is intended for distribution to and use by residents of India only. You are viewing this video on the basis that you have confirmed your representation, agreement, and acknowledgement to the book running lead manager BRLM and the company that 1. You are the intended recipient of this video, and 2. You are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view this video, please exit this video. Caution: investors are advised not to rely on any other document, content, or information provided in respect to the public issue on the internet/online websites/social media platforms/microblogging platforms by influencers. Investors are advised to rely only on the information contained in the offer document and price band advertisement for making investment decision. Investors are advised to read the draft red herring prospectus dated May 25, 2026, DRHP, available on the websites of Matangi Rubber Limited's IPO consists of a fresh issue of 57,61,831 equity shares of 10 rupees and an offer for sale, 15,15,150 equity shares of 10 rupees each. The total offer size is up to 72,76,981 equity shares of face value of 10 rupees. The offer for sale involves the sale of equity shares held by the selling shareholders in the IPO, and proceeds of the offer for sale will not be received by the company. Our company was originally incorporated as Matangi Rubber Private Limited on June 23, 2004, and the name of the company was changed to Matangi Rubber Limited on November 4, 2024. We have our registered and corporate office at Saket, South Delhi. For further details, see History and Certain Corporate Matters on page 236 of DRHP. India's rubber industry represents a large and diversified manufacturing ecosystem, with the tire segment constituting one of the most significant demand drivers for rubber consumption in the country. The industry spans natural rubber, synthetic rubber, reclaimed rubber, and a broad range of downstream rubber products used across automotive, transportation, industrial, infrastructure, and consumer applications. India remains one of the world's major natural rubber consuming countries and continues to operate with a structural gap between domestic natural rubber production and consumption. According to Rubber Board data cited in industry publications, India's natural rubber production during fiscal year 2023-24 stood at approximately 857,000 tons, while domestic consumption was approximately 1,416,000 tons, indicating continued dependence on imports to meet industry demand. The domestic rubber market is therefore influenced by plantation output, import availability, global rubber prices, and crude oil-linked synthetic rubber costs. The Indian tire market is estimated at $12.17 billion in 2025. Is projected to reach $13.05 billion in 2026 and is expected to expand to approximately $24.55 billion by 2035 reflecting a CAGR of 7.27% over the forecast period. The growth trajectory indicates steady structural expansion supported by increasing vehicle penetration, logistics activity growth, and gradual premiumization in tire consumption patterns. Unless otherwise indicated, the industry and market-related information in this section has been derived from a report titled Industry Report on Rubber, Tire Industry, dated May 20, 2026, prepared by Infomerics Analytics and Research Private Limited. The Infomerics Report. We commissioned and paid for the Infomerics Report for the purposes of confirming our understanding of the industry, specifically for the purpose of the issue for an agreed fee. We engaged Infomerics in connection with the preparation of the Infomerics report, pursuant to an engagement letter dated February 28, 2025. The data included herein includes excerpts from the Infomerics report and may have been reordered by us for the purposes of presentation. For further details, see Industry Overview on page 128 of the DRHP. We are engaged in the business of manufacturing of tires, tire flaps, tubes, and rubber compound. Our tire portfolio primarily caters to the two-wheeler and three-wheeler segments, while the tire flaps and tubes manufactured by us are mainly used in commercial vehicles such as trucks, buses, and heavy utility vehicles, whereas rubber compound is used in manufacturing of other rubber materials. Further, our company has acquired 97.74% stake in MG Industries Limited on 31st October 2024. Manufacturing and selling. a business model wherein a company undertakes the end-to-end manufacturing of products under its own brand name and subsequently markets and sells such products in the market. In our case, we are engaged in the manufacturing and selling of tire tubes under our own brand. Under this arrangement, we procure the required raw materials independently and carry out the complete manufacturing process using our in-house production facilities. The finished products are thereafter marketed, distributed, and sold by us through our sales network to customers across various markets. Contract manufacturing. Contract manufacturing, also referred to as outsourcing or third-party manufacturing, is a business arrangement in which one company, the client, engages another company, the contract manufacturer, to produce goods on its behalf. As a contract manufacturer, we specialize in the production of tire flaps. Utilizing raw materials procured specifically for this purpose and employing our in-house manufacturing capabilities, we produce tire flaps customized with the client's logo. These finished products are then sold to the respective customers. Job work service, a business model in which a principal company outsources a specific segment of its manufacturing process to an external manufacturing company. In our case, the production of tires, tire flaps, and tubes to a third-party service provider. Under this arrangement, we perform the designated processing or conversion work on behalf of the principal company, wherein the raw materials are provided by the principal company and we are only responsible for converting such raw material into tires, tire flaps, or tubes using our manufacturing facilities, for which we receive conversion charges based on the agreed terms from the principal company. Below is the table showing contribution of each business verticals to the total revenue from operations. We have in total 5 manufacturing plants, out of which 2 plants are located at Selaki, Dehradun, Uttarakhand, 2 plants at Bhind, Gwalior, Madhya Pradesh, and 1 plant at Gummidipundi, Chennai, Tamil Nadu. Government and statutory approvals. Refer page 367. For further details, refer to Object of the Offer on page 103. For further details, see Our Business on page 188 of the DRHP. Investors should note the following important risks. 1. There are certain outstanding legal proceedings involving our company, which, if determined against us, may have an adverse effect on our business, cash flows, and results of operations. 2. We have experienced negative cash flows from investing and financing activities in the past and may continue to do so in the future, which could adversely affect our business, prospects, financial condition, cash flows, and results of operations. 3. An increase in raw material prices and fluctuations may adversely impact our business, financial condition, and operational results. 4. Our business is dependent and will continue to be dependent on our manufacturing units. Any disruption, breakdown, or failure of machinery, disruption to power sources, or any unplanned or temporary shutdown of our manufacturing units' capacities, and an inability to effectively utilize our expanded production capacity may have a material adverse effect on our business, results of operations, financial condition, and cash flows. 5. We derived 41.30% of our revenue for the period December 31st, 2025 and 48.87%, 45.34% and 57.87% of our revenue from operation from Uttarakhand for the fiscal 2025, fiscal 2024 and fiscal 2023 respectively. Any adverse developments, social and political developments, and natural disaster affecting our operations in these regions could have an adverse impact on our revenue and results of operations. For further details, see Risk Factors on page 22 of the DRHP. The promoters of our company are Mohit Gupta, Manju Gupta, Radhika Gupta, Vandana Rubber and Chemicals Private Limited. As on the date of this draft red herring prospectus, our promoters hold an aggregate of 185,374,474 equity shares of face value of 10 rupees, each equivalent to 81.11% of the pre-issued, subscribed and paid up equity share capital of our company. For further details of shareholding of our promoters and promoter group, see section titled Capital Structure on page 84. Vandana Rubber and Chemicals Private Limited, Anju Khanna, Priyanka Khanna, Pratyush Handa and Radhika Gupta are the promoter, selling shareholder and other selling shareholder. For further details, see our promoters and promoter group on page 258 of the DRHP. As on the date of this draft red herring prospectus, our board comprises of 1 managing director, 1 joint managing director, 1 executive women director and 3 independent director. For further details, see our management on page 243 of the DRHP. Matangi Rubber Limited reported a total income of approximately 8,939.13 lakhs for the period ended December 31st, 2025 and approximately 10,630.26 lakhs for fiscal 2025. EBITDA stood at approximately 2,376.66 lakhs and 3,088.68 lakhs, translating into an EBITDA margin of approximately 27.43% and 30.49% for the respective periods. Profit after tax, PAT, was approximately 1,680.22 lakhs for the period ended December 31st, 2025, and approximately 2,002.76 lakhs for fiscal 2025, with PAT margins of approximately 18.80% and 18.84% respectively. For further details, see Restated Consolidated Financial Statements on page 268 of the draft Red Herring Prospectus. There are certain outstanding legal proceedings involving our company, which, if determined against us, may have an adverse effect on our business, cash flows, and results of operations. A summary of outstanding litigation proceedings involving our company, promoters, and senior management is set out below. For further details, see Outstanding Litigation and Material Developments on page 362 of the draft Red Herring Prospectus. The net proceeds of the fresh offer, that is, gross proceeds of the fresh offer, less the offer expenses apportioned to our company, net proceeds, are proposed to be utilized in the following manner. 1. Repayment/prepayment, in full or in part, of certain outstanding loans availed by our company. 2. Funding capital expenditure requirements for setting up greenfield manufacturing facility for rubber recycling products. Bhind, Madhya Pradesh. 3. Funding capital expenditure requirements for setting up greenfield manufacturing facility for production of solid tires. Bhind, Madhya Pradesh. 4. General corporate purposes. For further details, see Objects of the Offer on page 103 of the draft Red Herring Prospectus. IPO will be conducted through book building in compliance with Regulation 6(2) and Regulation 31 of the SEBI ICDR regulations, with allotment of not less than 75% of the offer to QIBs, not more than 15% to non-institutional investors, and not more than 10% to retail individual bidders. The equity shares will be listed on the BSE and NSE. Sarthi Capital Advisors Private Limited is the book-running lead manager to the offer. For further details, see Offer Structure on page 399 of the draft Red Herring Prospectus. The book-running lead manager associated with the offer is Sarthi Capital Advisors Private Limited and have handled 9 public issues in the past 3 years, out of which 1 issues closed below the offer price on listing date. For further details, see Other Regulatory and Statutory Disclosures on page 382 of the draft Red Herring Prospectus. Investments in equity and equity-related securities involve a degree of risk, and investors should not invest any funds in the offer unless they can afford to take the risk of losing their entire investment. Please read the DRHP, dated May 25, 2026, and any corrigendum or addendums thereto. For further information, please read the DRHP, dated May 25, 2026, available on websites of. Potential investors should rely on the RHP to be filed with the Registrar of Companies for making any investment decision. For risk factors, please refer to page 22 of the DRHP. For financial information, please refer to page 268 of the DRHP. For outstanding litigations, please refer to page 362 of the DRHP. Neither the company nor the promoter group selling shareholder are seeking an investment from you based on this video. This is a video for information purposes only and is not a promotional video and does not constitute an invitation or offer to acquire, purchase, or subscribe to the equity shares of the company. Potential investors should wait for the Red Herring Prospectus to be filed in relation to the offer for making any investment decision.